So good morning, good afternoon. In Italy, in the Central European Europe is afternoon. And we are very pleased to host you today for this important webinar as a O.I.B.R. Foundation. O.I.B.R. stands for Italian Foundation for Business Reporting. Is very pleased to organize together with EFRAG and IFRS Foundation this webinar, which we hope will open some new avenues for thinking and reflection on this topic. The topic today, as you know, is about ESRS and integrated reporting, the viability of integrated reporting in the context of the European Sustainability Reporting Standards, ESRS. We have a very distinctive speakers, and I prepared myself a couple of few slides just to frame in a better and clearer terms the problem we're going to talk today. So let me share for a few minutes my screen before moving on to the next to the following speakers that I will present to you along the way. So this is some confusing introductory notes. The aim of the webinar is quite, I hope, clear, just to discuss about technical reporting issues that a company in EU has to address when preparing an integrated report in the new context of the European Sustainability Reporting Standards, and of course, as a background, the Corporate Sustainability Reporting Directive, the famous, well-known CSRD. According to some views, the fact that certain legal requirements imposed by the new EU setting, for instance, the mandatory inclusion of sustainability disclosures in a special section of the management report, or the rigid structure of the required sustainability statement to be included in the management report, can make it overly complex to respect at the same time the implications from the indications, from the integrated reporting frame. On the other hand, there are other voices that according to which the new legislation in Europe, in the European Union, and the new standards may also foster, so the opposite, the adoption of integrated reporting, owing to the coherence, the consistency between the disclosure contents between these two forms of reporting, the integrated reporting framework, these two, and of course, ESRS and the directive, the CSRD. So we wanted to try to make it clear, try to explore better these possible contradictions or problems or issues. A few introductory points, we have about 500 registrants today, and many of these registrants are not from Europe, not from Italy, but maybe from Japan, from South Africa, and from other countries, which of course we greet them very warmly. Thank you for being thank you for being here. So as a background, we have a new directive that came into force in January 2023 that requires sustainability statement to be included in an identifiable and devoted section of the management report, as I said. The European standards for sustainability reporting, of course, made it more specific, this requirement, also indicating the structure that has to be adopted to present this information. Of course, the European standards also included the possibility to use the so-called incorporation by reference mechanism to include information from other selected documents in order to avoid duplication of disclosures. On this specific point, the next prestigious speaker, Chiara del Prete from EFRAG, I'm sure will get more in detail. On the other hand, let me point out a forgotten issue that somehow might be a bridge also with integrated reporting, because the one article of the the directive of this European legislation requires public interest entities, generally listed companies, banks, and insurances, to report on intangibles that are not currently accounted for in financial statements. This, in my view, personal view, is quite forgotten requirement posed by the CSRD. Looking at the integrated report, often is being called a third type of reporting concept. In Latin, we would say tertium genus, because it's not an enhanced sustainability report. It does not include only financial information, but also intangibles related information. So it's a little bit a different animal, which, this information sometimes, especially the intangibles one at the moment, is only partially covered by the CSRD and the standards, the European standards, but it needs to be addressed for the reason I just said, that the legislation on intangibles, including in CSRD. Interestingly enough, integrated report can be and is actually adopted by many, not only by large listed companies, but also by SMEs, public sector entities, for instance, and not-for-profit organizations. The Italian example is quite in front of our eyes because there's really a variety of practices. For instance, the Italian, the commune, the town hall of Bologna. Bologna is one of the largest towns in Italy, adopts integrated report for their accounts. And of course, other not-for-profit organization like the Science Park in Trieste, also some public sector universities and so on, and also SMEs. We will have an example of SMEs later on in this webinar. Anyway, also we noticed in the last few years a little decrease, less enthusiasm for integrated reporting, at least in Italy, in general in Europe. So some key questions arise quite naturally. What are the opportunities and challenges for IR adopters when they face the new EU regulatory reporting landscape? The possible technical solutions the companies may adopt if we think that some misalignment or issues between CSRD, ESRS on one side and IR, we think they exist. What can be the role of the respective institutions, EFRAG and European Commission on the one side, and IFRS Foundation on the other side, can play to support European companies facing these possible difficulties, if we admit that we have these difficulties. The impression is by many is that the respective contents, on the one side, sustainability statement according to the new legislation and integrated reporting, at the end of the day, are quite similar. Different levels of details, of course, but however, the presentation could or should be different and differentiating. We wonder, is this impression correct? And how, therefore, once again, how can we usefully address the perceived possible issues in and around this relationship? Ultimately, we can just say with a famous sentence, echoing the famous sentence, ESRS and integrated reporting are or should be congenial or uncongenial twins. So in short, with this webinar, our OIBR would like to launch and encourage an international and European reflection and debate on this potentially important relationship between ESRS and IR that we frankly believe could be very beneficial to both sides in evolutionary terms. So with this confusing introductory notes, I'm very happy to introduce to you the next speaker, that is Dr. Chiara del Prete. She is very well known in Europe, is chairwoman of Sustainability Reporting Technical Expert Group of EFRAG. So she bears lots of responsibilities from a technical issue, from this technical viewpoint. Thank you, Chiara, for being with us once again. And of course, the word to you.
Thank you. And I hope you can see my slides.
Perfectly. You just need it, maybe if you want to make it bigger, but we see very well.
So thanks a lot for the invitation, and good morning, afternoon, depending on where you are. So starting from where Stefano ended, what is the situation of the interaction in terms of regulations between integrated reporting and the ESRS? ESRS are the standards that are mandatorily applied by undertakings in Europe under the scope of the Corporate Sustainability Reporting Directive, and among other things have detailed the content of and the structure of the ESRS sustainability statement. And they also follow the indication of the CSRD, the directive, on the mandatory location of the sustainability statement, which is in a dedicated section of the management report. This is in particular different from what the IFRS Foundation ISSB has done. In fact, the IFRS reporting is agnostic, so they don't give an indication of where the sustainability information has to be provided in the context of the general purpose financial reporting, which section specifically. Here we have a clear indication. It's a separate, dedicated section of the management report. And you need to consider what was the ultimate goal of these standards, which is to make sustainability and sustainability statement having an equal footing with financial statements. So ideally, you have these two pillars of corporate reporting with two clearly identified places for the reporting. And one important element for the sake of the integrated reporting, we will see, is the possibility to incorporate by reference content from other sections of the management report. So in ESRS, we have a mandatory structure of the sustainability statement, which is in Appendix D of the regulation, the Delegated Act. And in particular, I wouldn't say it's extremely rigid in terms of, or detailed in terms of structure, but it clearly defines four sections: general information, environment, social, and governance, where the content has to be located. And of course, per each of the section, there is the reference of the standards where the relevant disclosures are defined and prescribed. This is mandatory. We also have an appendix, Appendix F of ESRS 1, which is non-mandatory. So this is only recommended. This is what we could have done, but we didn't do, to do an extremely detailed and rigid structure, where you see, in addition to the 1, 2, 3, and 4 sections that they were also in the other appendix, in this case, per each topic, you also have first the IROs, impacts, risks, and opportunities that come from the topical standards, then those that come from the sector standard, and finally those that come from the entity-specific information. So this is recommended. Let me focus now on the incorporation by reference, which is in paragraph 119 and 222 of the Delegated Act. There is a closed list of regulated documents from which incorporation by reference is possible. And among the other regulated documents, there is also explicitly the possibility to incorporate by reference from any other section of the management report. The incorporation by reference is allowed under some conditions, including the fact that the paragraphs that are incorporated by reference needs to be a separate element of information clearly identified in the other section of the management report from which you do the or to which you do the incorporation by reference. So in the relevant section, you clearly identify these paragraphs, and then you do an incorporation by reference. But the important condition is also that by using the incorporation by reference, the undertaking nevertheless shall consider the overall cohesiveness of the reported information. And the reported information should not impair the readability of the sustainability statement. So in other terms, an aggressive use of the incorporation by reference that would translate the sustainability statement into a mere content index would not be possible and compliant with this. So you can incorporate by reference when this is appropriate, but without impairing the cohesiveness and the readability of the statement itself. And then we went one step further with this example in Appendix G of how the sustainability statement could incorporate by reference, for example, from an integrated executive summary. So you have the management report where you have a section called strategy and business, which is identified as responding to ESRS 2 SBM 1 paragraph 38, which is the strategy, business model, and value chain description. And this is the clear identification in another section of management report. So a section which is, for example, an integrated executive summary. And then we go into the sustainability statement, the bottom box, where in the general information at some point, by reference, this strategy and business component taken from the management report is incorporated by reference. I think, I mean, when we prepared these, we were faced with a concrete example facing the question how it is possible to pursue an integrated reporting under an ESRS environment, considering the rigidities that exist in the structure and in the content. And this is the way we have identified as an illustration. So basically, the companies can still continue to have their storytelling, their integrated story, so in an integrated executive summary, and then identifying the relevant component that will be incorporated by reference in the sustainability statement. In terms of a European position on the integrated report project, we recently replied, well, actually almost 1 year ago, to the agenda consultation of the ISSB. And in that context, one of the questions was what to do with the integrated report and management commentary project, a project that saw in the past EFRAG very much active, and that we supported, as we also support the idea of continuing the work of the management commentary together with the benefits of the integrated framework, integrated reporting framework. However, we consider that in this very moment, the priority should be to assist the correct implementation of the concepts of connectivity and connected information. That is something that is both in the IFRS and in ESRS. But we think that it's beneficial to consider both management commentary, integrated reporting together in a new product in a longer term project. So to conclude, some form of integration of information is allowed in the sustainability statement. So the tradition of having an integrated executive summary to communicate with the market can absolutely be continued. But in an idea to have this integrated executive summary as an introduction to both the pillars, the financial statements and the sustainability statements, each of them have their own structure, index, and content. And then connectivity as a priority. I have concluded. I hope I was not too long, Stefano.
Perfect. You've been perfect. we even 3 minutes ahead, which never happened probably. Thank you, Chiara. So In your view, but in the longer terms, how you see the evolution? Just take this opportunity. How do you see the evolution of this relationship, which at the moment, might present, according to somebody, some inconsistencies or difficulties and so on. So how you see your personal view?
Well, my personal view is really the fact that the integrated reporting framework is a very valuable tool to communicate the integrated value creation. And as such, it may continue to support the preparation of information at a more executive level, I would say. Because, of course, if you see the number of data points that we have in the sustainability statement, it will be anyway quite an important reading, in the sense it will be long, at least it may be similar to the financial statements now. So I see the relationship exactly as it is, or similar to the relationship that there is between the management commentary and the financial statements. So the integrated reporting and the financial statements. The financial statements goes more deep and in more detail, and the same will be valid also for the sustainability statement. I see very much a nice symmetry, and the integrated reporting could even help in achieving this objective of reaching the same, being on equal footing, bringing together the executive summary elements.
Thank you, Chiara. One question from the audience, given that we still have 1 minute. How you would address the assurance problem, in the sense that some parts, the question says, some part of the management report is not necessarily assured at the same level. And so how would you see this assurance point problem between of course, the sustainability statement has to be assured, limited assurance at the beginning and reasonable assurance further down, the years. How you can use incorporation by reference with the management report, because the assurance level can be different. Do you see this as an issue?
Not necessarily, in the sense that it's true that the requirement in the delegated act is that the part of the document that is incorporated by reference needs to have the same level of assurance, subject to the same level of assurance as a sustainability statement. But it is not a case that in paragraph 120 we say may incorporate by reference to documents or part of the documents. And we did this precisely because we didn't want to impose the burden of auditing the entire document, but simply the part of the document. So the paragraphs that I showed you before, strategy and business model. So that part of the document, which is incorporated by reference and identified as such in the native document. So in the part of the management report that you're going to make reference to, only that part, the page, the half a page, the paragraph, whatever, the part of the document needs to be subject to the same level of assurance, not the entirety.
Okay, so it's an approach by pieces yes. That can yes. be incorporated by reference. Okay, Chiara, just thank you so much for this explanations and views from, of course, the EFRAG. I just take this opportunity to inform you and, of course, many of the participants that on the 18th of October in Milan, there will be a conference organized by IFRS Foundation and O.I.B.R. Foundation on integrated reporting and integrated thinking. And of course, Chiara, needless to say that, of course, we would like to have you with us in Milan. We know that you're quite close to Milan for your personal reasons. And so this is a kind of topic that we're going to go back on the 18th of October, which is a Friday, incidentally, in Milan. So, of course, you will get more information about this. Thank you for being with us, Chiara.
Thanks a lot. Thanks a lot.
And let me pass on to the other side let's talk. Let's take a walk on a wild side of the. Just joking, but let's see what IFRS Foundation, how this foundation looks at the integrated reporting and ESRS kind of relationship. Laura Girella is with us, Professor Laura Girella. She's a technical director of connectivity integrated reporting at the IFRS Foundation. Thank you, Laura, for being with us and sharing your thoughts.
Thanks a lot, Stefano, and thanks a lot to the O.I.B.R. Foundation. Hopefully this is not going to be a too wild type of presentation. But thank you so much for start addressing this important issue, which is about ESRSs and integrated reporting and how the two can coexist. So before going a little bit more into the details, just to say I'm not going to provide any technical solution to this at the moment, but let's start from the basics, because I think it is important to remember what the framework says. Chiara has been mentioning the integrated reporting framework many times. So let's see what the framework says, both in terms of contents, but also in terms of presentation requirements. So I'll be brief, because if you're registered here, you might probably be familiar with this topic, but still, sometimes it's just important to remember some of the key points. So when we talk about integrated report, it's important to differentiate it from integrated reporting. So integrated report, we know it is quite a concise communication. We talk about communication in a quite deliberate way about, how the several aspects of the organization, from the strategy, the governance, the performance, articulated into the famous 6 capitals, and the prospects in the context of the external environment in which the organization operates, lead to the creation, preservation of erosion of value over the short, medium, and long term. So this is the integrated report. The integrated reporting is really the underlying process that is really funded on the concept of integrated thinking, and that results in the preparation of an integrated report. A couple of words on how we have been working to get this integrated reporting framework out. We are talking about a document that has been published back in December 2013, and clearly there have been quite preparatory works in order to get that prepared. But the first version of the framework has been released by the at the time, it was the International Integrated Reporting Council in December 2013, and then it has been revised in January 2021. And you're going to see on the right-hand side of the slides what are the key components of the Integrated Reporting Framework. And as you mentioned, Stefano, at the beginning, but also as Chiara mentioned before, you might see, and you also from the list of the fundamental concepts, the guiding principle, and the content elements, for example, when it comes to the strategic focus, when it comes to the stakeholder relationship, when it comes to business model, governance, risk and opportunities, and so on and so forth, that you might see that in terms of contents, you might understand that there are quite of similarities, not identical, between the integrated reporting framework and what are the requirements of ESRSs. Clearly, the requirements of ESRSs go much more in detail than the framework does. But I think this is an important aspect to note. So, integrated reporting framework and ESRSs share some similar concepts and notions. What is somehow the issue? The issue, and one of the, not really the issue, the difference is about the fact that the users of an integrated report at the international level is about explaining providers of financial capital, how, as I said before, the organization creates, preserves, overrodes value over time. So it has a quite specific audience, which is about providers of financial capital. Having said that, other stakeholders can benefit from the information that are included into an integrated report. So this is to some extent, one of the first differences between the focus and the audience of the integrated report and ESRSs. The other point that also Stefano mentioned at the beginning is that even if at the beginning, regionally speaking, the integrated reporting framework was drafted really having in mind large listed companies, so start addressing how the private sector was providing this type of information, it is also important to note that over the years we have been seeing and noting that there are different types of organizations, not only in Italy, but also internationally, that have been adopting the integrated report. So, for example, public sector companies, SMEs, but also not-for-profit organizations. Let's come now to what the presentation of integrated report is about. And this is, as you can see, this is really taken from the integrated reporting framework. So the integrated report, the framework says, should be a designated identifiable communication. So we're not really talking about a section, we're not talking about a report, we are talking about a communication. Other important points that I think are useful to highlight, especially in this context, talking about the coexistence with ESRSs, is that an integrated report is intended to be more than a summary of information. And what it makes explicit, it is really the connectivity of information. So we know that nowadays the real focus, and also Chiara mentioned that, is about connectivity. It became a really fashionable word nowadays. But back in 2013, the focus of an integrated report has always been about connectivity of information and all the different type of information that I was mentioning before, so related to the strategy, the governance, the risks and opportunities, and referring to both qualitative and quantitative information. Other important points in relation to the presentation of an integrated report is the importance of the fact that, also similarly to what ISSB says, it's about not obscuring information. So basically, it is important, the integrated reporting framework can be prepared in response to existing compliance requirements, but if is required to include specified information beyond what is required by an integrated reporting framework, this principle of not obscuring information also comes out. Other important points is that there is quite a flexibility in the way the integrated report can be presented. The framework says it can be either a standalone document or be included as a distinguishable, prominent, accessible part of another report or communication. It can provide an entry point. And so, for example, we know that there are organizations that are using this as a sort of an umbrella report where high-level type of information are included and then refer to other more specific documents where, for example, users can find information, more detailed information about the environmental, social, for example, performance and the company and so on and so forth. So this is really what the framework says about the presentation. We have been seeing that actually the integrated reporting framework has been adopted in different ways around the world. So there are companies that have decided to include the integrated report in the management report, in France, especially in the universal registration document. But there are also many, many other organizations in Europe and abroad that are using and are locating their integrated report throughout their entire annual reporting package. So not a section, not a distinct document, but really the core of the corporate communication. Let's see what is happening in terms of adoption internationally and in Europe. So internationally speaking, now here you can see kind of a overview of the adoption of the integrated reporting framework internationally from especially 2020-21, so since today. And the focus here, so the population that is captured here in this slide, is that basically is the population that referred to listed companies only, so a subset of the entire population that today adopt integrated report. And these are reports that mention the integrated reporting framework, or IFRS, and that include value creation model or capitals as words within their report. So again, quite a specific type of population that is depicted here, but just to give you some numbers. So you can see that, for example, in the Asia-Oceania region, it is quite widespread adoption, as well as in Middle East and Africa. In Europe, as I'm going to say in a minute, we have been seeing that probably, I'm not saying that this was the cause, but probably also in light of the adoption of the non-financial reporting directive since some years ago, there has been a little bit of decrease of adoption of this type of reporting tool. And here you have the numbers, a little bit of an idea about what is happening in Europe, both in terms of IR reporters, so the population that I referred to in the previous slide, but also in terms of references. So really a larger population that captures also those reports that reference and are informed by the integrated report. So it is possible to note that, again, not only as Stefano mentioned at the beginning, in Italy, but also in Europe in general, there has been a little bit of decrease in the adoption of the integrated report. How the integrated reporting framework is adopted based on trends, as I said before, there are countries where the integrated report is somehow a substitute or at least located within the management report, such as, for example, in Spain and in Germany. In France, there are companies that include this report within the universal registration document. And just to note, these are two kind of documents that are referred to in the paragraph that Chiara mentioned before. So a document to which you can incorporate by reference. But it's also fair to say that in general, there is quite of a mix of practice, and there are many other organizations and companies, as I said before, that are using their entire annual report as a location, so to speak, of their integrated report. And so what Chiara mentioned before in terms of incorporation by reference mechanisms, and also the paragraph that Chiara mentioned before, it is something that actually we will keep monitoring, because we would really like to understand how the practice of integrated reporting evolves in Europe in light of the EU CSRD, the ESRSs, and especially for those, as I said, IR reporters that locate the integrated report throughout their entire annual report, and not just in the management report, and not just in a particular section of that report. With that, I'm going to hand back over to you, Stefano.
Thank you, Professor Dr. Laura Girella. Thank you, Laura, for being with us, for providing a different perspective. Of course, the IR adoption, in my view, is much larger in Europe than the numbers you have just shown, because these refer only to listed companies. And of course, as I said, in Italy, there's a variety of practices, even small and medium enterprises. We will hear in the next few minutes from a number of those. And so I think it's still quite an important reporting practice in many European countries, and also in Italy, of course. But now, after having heard Dr. Chiara del Prete and Professor Laura Girella, we thought that to introduce a moment where there's not really a presentation, but we would like to have more a chat, a bit of a in conversation with Tjeerd Krumpelman, that we thank him very much for being with us. And Tjeerd has two hats, if I can say so, or even three, but I prefer two for the time being. One is, of course, is the chair of Integrated Thinking Strategy Group at the IFRS Foundation, so a deep understanding also from a standard setting and institutional perspective. But it was also till a few weeks ago, formerly the global head of reporting, regulations, and stakeholder management at a big European bank, ABN AMRO. is a Dutch bank. Tjeerd is also Dutch, but we still love him. And we thank you very much still, Tjeerd. So I have a few questions for you. So let's see if we can introduce our conversation. Can you give us a brief description of your experiences so audience can also realize and understand better from where you come from about, of course, non-financial reporting? Thank you, Tjeerd.
Thank you, Stefano. Thank you for inviting me and for this wonderful introduction. I have many hats, but I will limit myself to these two for today. And you're right. So over the last 12, 13 years, I developed the non-financial reporting within ABN AMRO, together with many others, of course. But we started with a very simple, basic, standalone sustainability report or sustainability, statement, not in line with CSRD, of course, but just a very brief statement. And we developed from 2015 onwards a full integrated report in line with assurance standards and GRI frameworks. And following that, we also developed using the core and more approach from Accountancy Europe to have a really, in our view, a really concise integrated report, but also different publications around impact or human rights or biodiversity, or we even called our annual report one of the more reports that included the financial statements. So the core report at a certain time was our integrated report at ABN AMRO. And with my other role within IFRS and former IRC, what I've tried to develop together with many companies is the concept of integrated thinking, which to me is at the very heart of all that we are trying to accomplish here. But I'm sure we're going to talk about that in a few moments. So that's briefly my background.
Thank you for this. For just to cut a long story short, as they say. And so, what made the ABN AMRO to decide to move to integrated reporting in the first place? In 2015, if I not got it wrong. And what has been the results? What has been the results of this? How do you judge the results of ABN AMRO?
Yeah, it's a good question, and I think there's a few answers in terms of what drove us to start with integrated reporting. One is just the developments in the market. We saw this as an interesting framework to further develop our reporting suite. It wasn't driven by sustainability or by large sustainability ambitions that we had, because we didn't really have them at the time. We had a separate strategy on sustainability. So it was, and I must admit, in hindsight, it wasn't a very good integrated report, this first one. It was almost 500 pages, so it was hardly concise, very low on assurance. It was difficult to do, but we learned a lot from it, and that is my key message. From good reporting, it has a disciplining effect on a company, and you can learn a tremendous amount of improvement areas for your organization as such. So the journey of integrated reporting is also a journey of learning. It's a journey of collaboration within a company. You have to work together to really make that happen. And I think those are some of the findings that we have picked up since 2015, and that has really had an effect on how we run the business in the years after.
Thank you for making clear that the original idea was not necessarily to be sustainability driven, but that is this of course came after, but it's also an interesting point of view. But following up on this, what is your view of the impact or the results of integrated reporting within companies? Just looking more, around you, not only ABN AMRO, well, it also particularly within the financial sector. Of course, it was the sector where you've been working.
Yeah. So what we've seen, and we've also studied this from the IFRS Foundation perspective and presented many case studies on different companies. What we've seen is that the journey of integrated reporting can actually accelerate the embedding of sustainability or the topic of integrated thinking within a company. Sometimes in some companies, there is a large sustainable ambition, a big focus on value creation already. And then that leads into more integrated reporting. But in many companies, the reporting can also drive the thinking. And that is definitely what we have seen, that the effect of reporting where you are asked to answer questions and the basic principles within IR. For instance, how do you create values? How do you create value? Who are your stakeholders? How is this information connected, as Laura mentioned in her presentation as well? I think those types of questions really have an enormous effect, first on the reporting, perhaps, but also on the company, the senior management, and the executive board of a company. If you ask the executive board of a company and senior management, how do you really create value in the short, medium, and long term? That is a difficult question to answer. And it's a good question, but it's a difficult question to answer. And by reporting on it on an annual basis, it kind of has a disciplinary effect there.
Thank you so much, Tjeerd, for this. But now this has been so to some extent the good old days. But now, of course, all the dreams come to an end. Maybe just provoking you a little bit. And which is your experience then with the CSRD and the ESRS within a bank, within a large bank like ABN and AMRO?
Yeah, so of course we've seen these developments coming for years. There have been draft versions, and we've even helped and given our feedback and tried to support this, because from a sustainability perspective, this is really helpful. The standards are very much very well structured. They would have delivered a great sustainability report, and they are going to deliver great sustainability statements, much better than we have seen for many companies over the last couple of years. We have tried at ABN AMRO, and this was my last project, I would say, or I was part of this as one of my last projects. In the 23 annual report of ABN AMRO, we've tried to kind of do our best to combine integrated reporting and a CSRD requirements or ESRS requirements in the integrated annual report for 2023. And we found it to be very challenging. A lot of potential overlap, a lot of difficulties to meet the ESRS requirements and still be true to the concept, to the principles of integrated reporting. And I've heard Chiara say, and I've read the standards, you know, this incorporation by reference is of course allowed. Auditors are not really happy with it. It creates a lot of overlap, and actually it created a much bigger report than we would have liked probably. So again, we're back to almost 500 pages of annual report, and I really must emphasize we did our best to make it a good annual report, because we put a lot of effort into it, but it was a struggle to come up with a good integrated CSRD ready report, and I'm concerned about that. I really worry about that going forward, because the purpose of an integrated report, as Laura explained really well, is not just about sustainability. It is about value creation, and it is about demonstrating how you create value. Sustainability is one of those elements. And what has been helpful from a corporate perspective is this push for integration is also a push for embedding sustainability across all functions within a bank, in my case. So risk has to do something, finance has to do something, HR, the business, the client units, or I mentioned risk strategy, all these teams, product development, they all have to embrace sustainability in an integrated way. And by pushing towards separate statements or encouraging separate statements, I'm sure it will be helpful, as said, so it will be helpful for many companies. But to push for true integration of sustainability into business models, into value creation, into strategies of corporates, I think this is where we might see a little bit of a step back in the short term. In the long term, I'm always an optimist. We need to be working in this space. But in the short term, I'm a little bit worried about what companies will be doing.
Following up, in this respect, what can you just summarize for us what are the biggest challenges in your view to embed ESRS into an integrated report? You know, just can we marry them together for a national institution? What do you think, Tjeerd?
I think we can, and I think we should, right? So as just said, I think this group of people, and it's great to see so many people in this webinar as well. We have to be the optimists. We have to be the people that are doing this. So I'll split my answer into two groups. One is the group of people like myself, like you, like many in this webinar that are actually working on this in companies, in organizations, helping others. I'm a consultant now. My goal is to really help others to do this properly. And my recommendation to them is always try to do it to the best of your ability. Take it seriously, put your effort into it, and do the best that you can. It will help your organization tremendously. Both ESRS and the IR framework can really help your company to drive sustainability and value creation into the next level. It can help your board. It can help your executive team to take this seriously. That's the group that I work with a lot and that I enjoy working with. There's also another group that is working on the regulation side, that is working on the more technical side, the rules and the regulations around this. And I respect them tremendously for the effort that they are doing and for the results that they have demonstrated. And the fact that the standards are here is a tremendous has been a tremendous journey and a tremendous amount of work, and they deserve our respect and our appreciation. But I would also encourage them to keep working together. I know there's a lot of collaboration between these different institutions, and I would encourage them to do even more. From the IFRS standpoint, and Laura showed this as well, we see a global development where sustainability is becoming a true part of so many companies and their disclosures, a real integrated part. Not referencing the framework, I'm just saying it's an integrated part of how companies are going to do business. And this is what we need as a species going forward to meet the challenges that we have on this planet. So I would encourage standard setters, regulatory people, please work together to make this connectivity, I'll call it connectivity for lack of a better word, but collaborate on connectivity as has been done in the past, but give that a little bit of an extra push going forward. It will help the first group of ambassadors that are on this call and that we work with on a daily basis.
Thank you for this. As a final message, what is your advice going forward? What is the most urgent things? We're all happy about the collaboration, of course, and of course also we must say that the big standard setters, both European and international, show collaboration, and so in this respect, I think there is a clear collaboration there. But what are the best things to be done in the short, medium term, in your view?
Yeah, so for the practitioner, just do it, do the best you can. We learn from each other as well, right? So to companies, keep doing this, publish your reports, and we will be the first to read them and to study and to be looking out for best practices. To the standard setters, I really would like to encourage you to work together a little bit more and to make sure that not only on concepts like materiality, where there's been a lot of debate around materiality, I don't find that too challenging at all. I think the challenge is much more in the essence of the purpose of an annual report. I think the essence should be to provide insight on value creation, and sustainability is a crucial element in that value creation part. So just a little bit more work there would be extremely appreciated, not only by me, but by so many people that are working on these reports.
Okay, Tjeerd, thank you very much for your also wise suggestions and advices from your man with your experience. I think we should be hearing that. Of course, I'm repeating that on 18th of October in Milan, we're going to have a conference, Integrated Reporting, Integrated Thinking. And of course, you will be part of this. It will be one of the actors. I just forgot to say that conference is for free. So there will be, of course, it will be streamed live for free as well. So thank you so much, Tjeerd, for being with us. The journey, we always, in the integrated reporting community, there's famous term, the journey, this is the journey. Well, the journey got a little bit more complex now in Europe, but I'm also optimistic like you, and I see lots of good things going, lots of passion going around. So thank you once again. Now let's move to more companies. I mean, we already had an overview about AB and AMRO, some of the possibilities and difficulties. Now let me call on screen Dr. Veronica Vari. Veronica Vari, thank you for being with us. Thank you to Italian Post Service, Poste Italiane. It's a very large group. I'm sure Veronica will tell us. It's a giant company with so many businesses inside. And of course, now they have a little bit of headache, I suspect, trying to apply ESRS within the CSRD framework. And because they, for many years, have been one of the champions of integrated reporting. Exactly. And they got also Oscar. We have Oscars in Italy, not for films, but for annual reports. And annual reports of Poste Italiane has been awarded many times as one of the best, annual report, integrated report in Italy. So thank you for being with us. Tell us about how you see this relationship from Poste Italiane. Thank you.
Good afternoon or good morning, everyone. I just want to really thank you for inviting us. It's always a pleasure to share with all participants and speakers insight from my company. Thank you also for the amazing introduction. I could not have said it better myself. Much has been already said. Sorry if I underline some of the points mentioned before. We recognize as a large company, as you said, we recognize many companies are asking themselves in Europe how to start. Maybe there are concerns about the final deliverable. In general, which information companies should make available, and more specifically, how to collect such data to be compliant to the new standards. But let me spend a few minutes about our journey. We need to go back. Poste Italiane have been listed on Italian stock exchange at the end of the 2015. It was the biggest IPO operations in Europe in that year, since we are involved in many areas and businesses, including the insurance sector. It was quite clear, I would say, that a good level of transparency around also sustainability targets, metrics, accountability, governance, business strategies, and as I said before, the value creation will become our priorities, since our stakeholders, investors, stakeholders started to be, of course, more demanding on such issues. In my mind, to be listed, or a listed company, large, middle, as well, maybe benefits from the specific roles, which already covers also some issues also about sustainability, and also to be under the supervision of bank or insurance authorities also must be to be really useful in order to be compliant also to the European international standards. So in my mind, to be listed is a milestone upon, I would say, a straight road to communities, also the sustainabilities. And as you mentioned before, after 2 years on voluntary basis, we released our first integrated report. For us, was the right way to combine qualitative and quantitative disclosure in line with the market needs, and also reflecting the difference as much as possible. We can, of course, the different areas in which our company are involved: insurance, digital payments, logistic, asset management, and the complexity of our corporate governance. So the terms integrate over the time is taking a broader meaning for us, with a greater decrease of difficulties, I would say. Integrate sustainability, also to how the sustainability is integrated in all areas, businesses which my company is involved. So, I mean, integrated, using the integrated report as in such modular approach, I will say, has been a proper way to open a windows to our stakeholders, because to need to communicate with them from a different angle. And I maybe believe there are a lot of high degree of alignment between the two different standards from my point of view. But we are constantly looking out for what is coming next. Every year, we perform an internal assessment to gradually incorporate all best practices, all best standards. We believe that we meet requirements of the main international standard guidelines, or anticipate the next trends. For instance, we already performed our first double materiality. We tried to perform the first our double materiality, taking into account, of course, the draft of the provision of the EU framework. This is really a useful exercise also for us, and also for our stakeholders. And obviously, we started the internal evaluation, aiming to analyze all regulatory requirements in order to respect, in order to be compliant in the best way, maybe the next year. So our past experience, again, we started 6 years ago to integrate our reporting, helping us to improving our internal governance structure. So we try to cover a broad spectrum of sustainability related reporting topics. We agree. I welcome all cooperation agreement between EFRAG and other international network to helping us to coverage all information in a proper way. But in my point of view, it would be interesting also to understand the point of view of the stakeholder abroad Europe, because maybe as a listed companies, we need to meet all the needs of all stakeholders, including abroad stakeholders, and not only the European, stakeholders. So maybe could be really interesting to understand the point of view abroad Europe.
Thank you, Dr. Vari. We just I didn't know exactly when you were going to finish, so thank you for being perfectly on time. May I ask you? I know a little bit of your, not much, a little bit of your reality and the reporting challenges you have to face. if I well understood, you having many difficult issues to face nowadays to comply with the CSRD and the ESRS. And of course, and so I was wondering how you plan to make the two integrated reporting and ESRS to talk to each other. How you think to combine? You're going to use perhaps inclusion, inclusion by reference, or what is your thinking at this stage?
This is a good question. There are no single answer to these questions. We are performing an analysis, internal analysis, and will take all the time. We'll let you know maybe next year, but it will be really interesting, as told you again, to meet all the needs of our stakeholders, also abroad Europe. So we'll take all the time. Again, I know a right answer for you today, but we are re-performing a lot of analysis in order to understand the better way to disclose all information.
Yeah, but so you still think that you need an analysis,
exactly,
some good analysis to understand. So you don't see this the way forward for
also considering all the business we are involved, right? So it's a quite we have a step over of complexity.
Yeah, because I just remind to the audience.
Exactly.
Poste Italiane has financial, banks, insurance, the post service, of course, so the
digital payments, logistics,
so
a lot of services.
It's an interesting company, multi businesses,
exactly.
And the businesses sometimes are not easy to put together in
Absolutely
one
not.
mold.
We'll do the best to meet all the needs.
So we will see, we just take note of some of the necessity for analysis, for further analysis. It's not obvious the way forward, the solution you will find. But of course, we will look forward to having more information from you about, as I said, you are one of the important players in the integrated reporting scene in Italy. And so it will be very important to see the solution you will identify to get both sustainability statement, ESRS, ESRD on the one side, and integrated reporting, being together in a synergic way. Indeed. So we look forward to your solutions in your course. So thank you very much. Thank you very much to Poste Italiane. And let's move on to another big Italian company that is quite well known, of course, for integrated reporting. And I would like to call on stage Dr. Lorenza Barsanti. And thank you, Lorenza, for being with us. Of course, your integrated report is quite well known. And of course, you're one of the leaders. You operate in a slightly different business, of course, from Poste Italiane. And so it's much more manufacturing. But of course, I give the floor to you so you can explain to the audience what SNAM is doing as a company, of course, as a business, but also in reporting terms. Thank you for being with us, Lorenza. It's always a pleasure.
Thank you, Stefano, for the introduction. It's a pleasure being here with you with the chance to explain what we meant for integrated report and what we think will be its future. Just 2 words to put our company in the context in order to make all the audience aware of what we do and what is our business sector and its peculiarities. SNAM is one of the world's leading energy infrastructure operators and one of the largest Italian listed companies in terms of market capitalization. We operate in Italy in the regulated market, and we offer gas transport, gas storage, and LNG regasification, also by means of international subsidiaries in other countries, in Albania, Austria, China, United Arab Emirates, France, Greece, and United Kingdom. The company has the most extensive transmission network among European peers. We have more than 30,000 kilometers of pipeline. And besides, we are investing in energy transition businesses such as sustainable mobility with natural gas and biomethane compressed or liquefied, the infrastructure for biomethane obtained from organic and agricultural waste, and energy efficiency services tailored to apartment buildings, public administration, and industry. Moreover, we are working on the introduction of hydrogen on our pipeline and in the sector of the carbon capture storage. So our company changed, and it's still changing a lot in these last years. So from a core business focused only on pipelines and gas infrastructure, we became a major player in the energy transition, working on renewable gases and innovation. And these changes were enabled also by integrated thinking, and in our opinion, integrated thinking meant to have an integrated approach to sustainability, acting on different pillars. And we tried to do this integrating completely our business strategy with our sustainability framework. So we are going to work on energy infrastructure and energy transition platform, using sustainability and innovation as key factors of success. Particularly our sustainability framework is developed according to 7 pillars, each one set with a clear ambition. And these 7 pillars are the infrastructure, the green transition, the carbon neutrality, the biodiversity and regeneration, the people and the local communities, and last but not the least, the transformative innovation that is an enabler of all other pillars. So on the left, we have what we do. On the right, we have the sustainability of what we are doing. In order to monitor the effectiveness of these actions, we have updated also our set of ESG performance indicator. And for each pillar, we have defined key KPIs and targets to be achieved by 2024 and 2027. And these targets are monitored and communicated to the market by means of our sustainability scorecard. Now let's talk about reporting. Speaking of our reports, we started in 1995 with an environmental report, and we arrived in 2022 with a non-financial statement that is contained in the integrated report as a specific section, a sustainability report, and a report focused on climate change according to the Task Force on Climate-Related Financial Disclosure. At the time, we chose to have different reports according to different targets of stakeholders. Sustainability report for the general stakeholder, the integrated report and non-financial statement focused on the institutional and financial stakeholder, and the climate report oriented to investors and all stakeholders interested to understand the climate impact on our business. In these years, we tried to define how the IRC capitals model must be applied in our company with its peculiarities and what is our business model. And our management report aims to represent, in addition to annual results, the SNAM's model for creating a sustainable value over the medium-long term. We chose the approach of combining the integrated report to the non-financial statement, choosing the non-financial statement, the option of a specific section inside the management report, also providing many cross-reference available in other sections of the management report. The non-financial statement was drawn up in accordance with the GRI sustainability reporting standards, of course, and sector standards applicable. The idea behind our integrated report was to maintain an equilibrium between director's report and non-financial statement. In the director's report, we had information about the business model, the business and the sustainability strategy, its impact on sustainability, the scenarios, the risk management model, and then in the non-financial statement, we put all the policies, the performances, and the main indicators. Then, due to several feedback received from stakeholders and top management about our documents and the opportunity to make a synergy between them, we reviewed our reporting approach for the 2023, integrating all the documents inside the non-financial statement and trying to rethink its structure in virtue of the upcoming CSRD directive. So with a view to what is required by the CSRDs from 2024 and pending the transposition of the directive into Italian law, the 2023 non-financial statement has been drawn up as a more self-supporting document. There are only minor references to other sections of the director's report, and so many topics have been directly included into the non-financial statement. For example, the governance and the management of impacts, risks, and opportunities, the risk management system, the sustainability strategy, the climate scenario. As you can see from this slide, the 2023 non-financial statement was built already in accordance with the ESRS structure. So a chapter with the general information, a chapter with the environmental information and governance information, including the sustainability strategies, the policies, the targets, the action, the risks and opportunities, and the indicators. In the management report, we left the business model and the business strategy with only a brief description of sustainability strategy in order to avoid repetitions. So what was left of the original structure of the integrated report? Very few things, I must say, and this is the occasion maybe to highlight some points of attention. First of all, the very schematic and binding structure of the sustainability statement, which is extremely specific, and the great amount of information required, which are not easy to integrate within the actual structure of the integrated report, since that the only option is to have a document as a specific chapter of the management report, and cross-reference is allowed only if the information present at least the same level of assurance as the sustainability standard. I heard the comment before of Dottoressa Del Prete I'd like to hear also the opinion of an Italian auditors, because I have some doubt on the feasibility to assure only a limited part of the management's report. There is also the problem of the digitalization, because the management report hasn't the same type of digitalization of the sustainability statement. There will be the XBLR, and the XBLR is a type of digitalization, sorry to pronounce, that is mandatory only for the financial statement, not for the management report. Another point of attention is the communication approach. The information needs to be clear and easy to read, and the CSRD approach doesn't favor accessibility. The risk is increasing comparability from one side, that is good, but the risk is to lose the communication approach, which was a strong point of the integrated report, and made all this information easier to read by stakeholders, shareholders, and the larger portfolio of potential investors. So this is my final conclusion. I have no solutions to give to these problems, but I like only to highlight them in order to put them on the plate in order to have some discussion. Thank you all for the attention.
Thank you, Lorenza. Thank you so much. Thank you also for being frank in sharing with us, some of the issues you're facing, the auditing, how you combine these two different sources. So thank you for being very, very frank. I really liked also your presentation, because in a sense is from your preparer side that we understand if, certain architecture really work. Because at the end of the day, you are those that have to implement the information, to find information and to communicate information, of course. So thank you once again, Lorenza. Really appreciate your contribution, even if problematic. We like problematic in a sense, because if everybody's happy, it would be fantastic, but probably is a little bit of a tale, a children's tale. So thank you very much once again. And let me call on stage for the final speech and Dr. Laura Gori. Thank you for being with us, Laura. Laura represents a special company case. She will explain why, but she is a representative of a small, medium enterprise, maybe I should say quite small enterprise. And that applies since a number of years, integrated reporting. They're not listed. They don't operate, multi countries necessarily, or they have one business or multi-business. They have basically one business. She will tell you what. But it's one of the best cases we have in Italy of SMEs applying integrated reports so far. So we thought our O.I.B.R. that could have been a very interesting, opinion to be heard around, the possibility to apply it, to have consistently applied integrated reporting and the new standards. In her case in particular, the standard to be applied is the standard for the small and medium enterprises that is still in elaboration by EFRAG, but they participate, and Laura will explain better, in the EFRAG field test. And for this, they are really on the forefront of applying ESRS for SMEs. That is a simplified version, of course, but still in love probably with integrated reporting. So Laura, sorry, after this introduction, I leave the floor to you for your very interesting presentation from a different perspective, of course. Thank you, Laura.
Thank you. Good evening to you all, and thank you, Stefano, for your invitation and introduction. I would like the directorship to share my slides, please. Okay, thank you very much. Thank you. My name is Laura Gori. I am the founder and CEO of Way to Global, a small translation company set up as a benefit corporation. We specialize in the translation of financial and sustainability reports, actively contributing to and helping to steer the revolution transforming regulatory frameworks for sustainability reporting across Europe. Today, I am here not only as a passionate advocate for Benefit Corporation, but also as a member of the ASSO Benefit Board and as a certified Chief Value Officer to share insights from our journey as a small Italian startup, navigating the complexities of integrated reporting and the latest developments in ESRS disclosures. Next slide, please. Thank you. Here we are last year with Silvia proudly displaying her baby bump, a testament to our radical sustainability governance that supports both maternity and professional growth, exemplified by 3 maternity leaves in 2023 alone. Despite our size, with fewer than 15 employees and a turnover below 3 million euros, our status as a benefit corporation inspires us to aim high in sustainability, anticipating shifts brought about by the CSRD, guided by our bylaws. Since our foundation in 2017, we have been committed to merging profit with purpose, unconsciously applying an early concept of double materiality, and to transparently disclosing our ESG impact every year through an impact report. As a benefit corporation, our bylaws mandate fostering a culture of sustainability, a commitment which is deeply embedded in our common benefit purpose. We are devoted to translating, implementing, and spreading best practices in sustainability reporting, and we are proud to make a substantial contribution in this field, proving that the company's impact and values are more significant than its size. Here you can see my journey through sustainability reporting. In 2017, we started Way to Global, and I began drafting our first impact report to comply with the Benefit Corporation legislative requirement, while starting my lifelong learning program in ESG reporting. In 2020, I certified as a Chief Value Officer, evolving our impact report into a proper integrated report, which I consider the most mature and ambitious sustainability disclosure tool, thus remaining close to my heart as I dedicate the first half of each year to it. In 2023, I updated my knowledge with a master's in CSRD sustainability reporting, culminating in the creation of a pioneering ESRS compliant report. This year, I joined the EFRAG DSME public consultation and field test, where I contributed to the experimental drafting of a DSME sustainability statement, thereby helping to shape official regulations. Our long-standing commitment to integrated reporting represents our first love, enabling us to depict our complex business narrative through the beloved lenses of shared value creation, forward-thinking perspective, and the multi-capital holistic approach with a strong focus on the value of intangible assets. Our 2022 report, now in its 4th edition, was recognized among the top finalists at the Sustainability Reporting Awards, showcasing our ongoing commitment to advancing sustainability narratives. The introduction of the ESRS under the CSRD primarily challenges our existing approach to integrated reporting. We continually face decisions among the appropriate naming and structuring of our reporting, balancing the rigid and structured requirements of ESRS with the holistic and flexible narrative of integrated reporting. Doubts arise starting with the document's title itself. Should we rename it as a sustainability report, or is it more appropriate to keep it as an integrated report? And regarding the additional ESRS or VSME compliant report, should we refer to it as a sustainability statement following the terminology used in the standards? Balancing our expertise in integrated reporting, comprehensive ESRS standards, and the VSME standard offers constructive insights and enriches our perspective. However, navigating these diverse frameworks and standards can sometimes be confusing due to their differing requirements and approaches. Moreover, for way too global, the challenge is even greater, as drafting a management report that incorporates the new sustainability reporting marks another venture into uncharted territory for us. Last but not least, as a benefit corporation, we face the crucial task of integrating our impact report into an already complex framework, which is further complicated by the ongoing debate to update the laws regulating Italian benefit corporations and their impact reporting. The challenges we face in reconciling integrated reporting and ESRS reporting underscore the need for a focused exploration of how ESRS and IR diverge. This analysis, born from extensive research, highlights their distinct approaches and the significant effort involved in structuring our sustainability content. Hopefully, it will turn out to be a useful resource for fellow preparers tackling similar challenges. So let's start from purpose. ESRS enhance the consistency and comparability of disclosed information, aligning with the European Union's climate goals, while IR focuses on improving the quality of information about value creation to support efficiently capital allocation. Scope. ESRS are tailored for European companies, whereas IR has a global reach. Focus. ESRS focus on due diligence, ESG risk management, value chain, and double materiality. Conversely, IR emphasizes long-term value creation, strategic foresight, and connectivity among the 6 capitals, also highlighting opportunities for companies' future positioning. Approach. ESRS prescribe a structured format for detailed sustainability data to facilitate comparability. IR instead uses a flexible approach and a cohesive narrative to link diverse business performance aspects through integrated thinking. Audience. ESRS reports target investors, regulators, and shareholders. In contrast, IR explains how value is created over time, primarily to financial capital providers, but also to a broader audience, including customers, employees, and partners. Timeframe. ESRS requires disclosures over defined short, medium, and long-term periods. IR instead allows for flexible timeframes that companies can tailor to their industry and needs. In our search for a strategic balance that harmonizes IR and ESRS, we at Way to Global have devised an experimental approach to embed our impact report within the broader scope of the integrated report, building on practices we have established over the years. In addition, we will complement this by drafting a VSME compliant sustainability statement that avoids redundant disclosures by opting for inclusion or incorporation by reference. Both documents, the integrated report and the sustainability statement, will be embedded into our management report. Our key challenge involves strategically organizing content across multiple documents by effectively identifying regulatory overlaps, alignments, and distinctions to ensure clarity, eliminate redundancy, and achieve precise and impactful reporting. As I conclude, I feel compelled to share my Hamlet-like doubts. First, the experimental structure of the 4 documents I presented falls short with the integrated report's unique visual identity clashing with other documentation. Second, given the divergent materiality approaches of IR and ESRS, do we need to apply a double materiality assessment in the sustainability statement and a separate value creation based one in the IR? Third, choosing the most suitable materiality approach and time frame for benefit corporations' common good purposes remains for us a big challenge. So thank you for your attention, and I will return to my valley of tears.
Oh, thank you very much, Laura. Very insightful presentation. There's been a number of favorable comments on the chat. And especially for me, it's always striking to see how a small company like Way2 Global, English translation company in particular, as you said, specialized in financial reporting and in general reporting, corporate reporting, is able to address these complex issues. Of course, your business is easier, but you're only like 15 people, so which makes it, quite extraordinary, we think, to have these answers. And of course, thank you also for putting a different perspective, because of course also VSM, the voluntary standard that EFRAG is elaborating on for SMEs in Europe is also another perspective from which to look at this relationship between integrated reporting and ESRS. And of course, we don't have to forget that, because millions and millions of European companies will be exposed on a voluntary basis, fair enough, to this voluntary standard by EFRAG. It will be, I think, ended in to the European Commission by the end of December 2024. And we expect that in 2025, this standard will be released by the European Commission. Once again, let me repeat, on a voluntary basis, it will not be mandatory. So Laura, thank you very much for your contribution. We are perfectly on time, and lots of suggestions, lots of issues. Tonight, let me take this opportunity to tell you that tonight, just after the event, a few minutes after the event will be available, or the recording, of course, of the event will be available at the O.I.B.R. Foundation website. We will share the exact link through, via email to reach you, so for you to have the pleasure to see again this some aspects, if you want, of the whole seminar. And what I learned today, I learned that, of course, in principle, we have a very nice architecture. An important step forward has been done, and EFRAG and the European Commission should be congratulated for this. I was also at the beginning in the task force. I was also part of the task force, so I'm particularly also on a personal level happy looking at the achievements. However, I also think that the integrated report will be an important form of reporting that can be and should be preserved, in the sense that talks, as Tjeerd mentioned, talks about value creation. Also, Laura Gori touched that, Lorenza and Veronica touched that. And so, in a sense, sustainability, we always say sustainability creates value. And we all agree, more or less, of course, with different accents, but more or less the statement is true. What I learned today is that we should make it work, probably. I don't know exactly how, but as I said, we think that at the O.I.B.R. that it was a great idea to start launching, the discussion, the reflection, and we are of course available to join this reflection. But of course, these are just preliminary conclusions and concluding remarks. The real conclusions will be delivered now by our unwinnable president, Professor Alessandro Lai, president of the O.I.B.R. Foundation, and of course, full professor of business economics at the University of Verona. Alessandro, I would like to leave to you the floor. I'm not envious of the difficulty of making some conclusions. I hope that, of course, all of you like the event. And with that, having said that, thank you once again. And Alessandro, the word and the floor is yours. Thank you once again.
Thanks, Stefano. Thanks, everyone talking this fabulous webinar. Well, it's difficult, but I can try to simplify the final conclusion and the path for future research and for future works that has to be done by both all of you and our foundation. The first is, well, we learned many things. We started from your questions, Stefano's question. There were very insights that you asked the reason why there is a problem, and you put us 6 questions, very important. I suggest you all to read again and to listen again to the question that Stefano posed: which are the opportunities and challenges that IR adopters have to face in the new EU regulatory landscape, and the technical solutions. But there is a conflict. There is a structural and technical conflict. That is one document. That is what is expected by the ESRS is very detailed. We have more than 1,000 data points, and the other has been conceived, IRIC, as a concise one with another purpose. So is it useful to maintain, to connect, or not useful? We can imagine that in the future we will have IR and the sustainability report, or just the sustainability report. Well, the answer that we got can be composed like that. Because ABN AMRO and Poste Italiane, Tjeerd and Veronica, both, told us how difficult it is to conceive and to put together some that is mandatory, that is the ESRS, for example, and voluntary now, that is IR, in terms also of to combine them. And their relations here, their disclosure here, show that there are many ontological problems at the root of these 2 documents and in the work of the people that have to do. And so the fact that 2 very great companies told us there is a problem, it means that we have to do a great work of research and so on. But we had also 2 different solutions. That is the solution proposed by Way to Global as their small and medium enterprise, and SNAM, a great firm, in which the last one, annual report, shows us an original way to combine all these documents in a way that seems to be simple, but really it requires a great structure to prepare these combined documents. So what to do? In Europe and also in Italy, we have a great experience of integrated report, and also of integrated report combined to non-financial reporting, linked to the non-financial reporting director. But we know the path toward the CSRD is complicated. So what we learned today? We learned from Chiara del Prete and Laura Girelli that a way may be the incorporation by reference. Sure, the incorporation by reference can be a path to be passed through, but we have to see in the future if the firms will continue on this path or not. On the other side, Laura Girella reminded us that the main purpose of IR, and some question also in the question and answer we had, was different from that of the sustainability report, because it's linked to connectivity, is conciseness, And she told us that other information must not obscure the concise information required to our IR in order to satisfy investor and then other stakeholders. So the main path of research are integrated report, and reporting distinction has been well explained by Laura, to be incorporated by reference as a solution by an ESRS disclosure, or single identities to be preserved, to give different information, to give different information to everyone. So this is the main question I take from this final conclusion. That is, we have to think about the role, not just the technique, but the role we can have adding voluntary disclosure beside also, or in order to not conclude our disclosure with mandatory disclosure SRS, but also to have the different and concise disclosure we can have on IR. And the experience we have in small and medium enterprise can help us also in Italy and Europe to think about that. So at the end of this, my talk, I can say that if you can listen again to this webinar, you can go, as Stefano told us, on our website. Just members of our foundation can have also the slides, and I invite you to contact Stefano to become member of our foundation if you like. But all these things can be discussed more and more in our conference we had on October 18 in Milan, October 18 in Milan, where we have to discuss a lot, because I think that IR will continue to have an important role in Europe as well as in other parts of the world to give insights and information about the link between sustainability and how to create value. Thank you very much for this kind listening to me, and have a good evening or morning as you like. Bye-bye.